Hi, everybody. Welcome. This is Paul Lange from Disciplined Trading Strategies. Renee, I didn't realize had that nice intro for me. I'm not sure if it came off my website. I don't remember writing it, but that sounded pretty good. Let me just give you a quick rundown who I am. You just heard from me. Basically, I have been around for a while. I'm starting to feel like a dinosaur rather than a spring chicken, but I have had a lot of experience working with people, trading, showing people how to be successful at making money. I want to take today and really go through what I feel is the most important part of what you need to do to learn if you want to make money for extra income, as long-term to manage your own long-term money, or as a full-time thing to be making money during the day trading. I plan to be doing this for about 4 years. I may extend that time at some point, but I'm upfront with everybody. And I'm very serious about what I'm doing and take it very seriously. If you look at my webpage, there's a couple of things you'll see about me right away. I'm here today to try to really help people who want to learn. I am not here. I have no special offers for you. I have no special deals. I'm not here in the aura of like trying to run a big company. I'm just simply having fun trading and showing people who want to learn with me. Some of the people I mentored a long time ago, 13, 14, 15 years ago, are with me in the trading room right now. And for those people who want a serious way to try to learn, that's what I'm here to do. But I want to take you today and I want to run through a couple of the main issues. I want to start from the beginning, which is simply that in order to have a basis to make money, you have to have some method or system. And that is technical analysis and reading charts for me, and probably for most of you if you're here listening to me. I'm not sure exactly what all presentations you're used to listening to if you attend these regularly at Investor Inspiration. I know it's a very popular place for a lot of people to go, but all I can do is give you exactly what I think the proper thing is that you need to know to get going. Whether you want to do it on your own, solicit a friend's help, solicit my help, that's up to you. The slide here in front of you, I want to come back to in a minute. We're going to talk about that in a couple of minutes because I think this is part of where the important part of learning how to trade lies. And that's why the title of this is From Chart Reader to Trader Investor. One of my favorite sayings is that I say chart readers, even good chart readers, are a dime a dozen. It's hard to learn how to read charts well, but it's not real hard. I think anybody can learn it. I think I can teach it to people fairly quickly in maybe 10 weeks or so. But even when you learn that, it doesn't guarantee you're going to make money. There are a lot of traps along the way that people don't understand, and I want to try to cover those with you today so that if you do get the proper education in reading charts, that hopefully you can take the next step and actually put that money into the bank account. So here's what we're going to look at real quick. I want to take you through the first step, which is learning the language of charts. That's kind of my phrase for understanding technical analysis. The proper analysis of chart reading. It may not be what you think. Never get hurt learning to trade. It's simply foolish to do so, even though 90% of the people do that. And the way to try to hit your goal may be wrong. It is something that may be stopping you from success. So let's take a look at the first one, language of charts. What do you do to make money? I'm not going to spend a lot of time on this. The focus today, I know a lot of people want to see charts and see the strategies, and that's all well and good, but I pull out some favorite charts I did recently. You look at them and go, oh, that's great, but you're not able to do them yourself, and it's not very fulfilling. It's fun to do. So I want to show you a couple things, what my favorites are. Speaking of favorites, I always like to bring this reference up when I talk. Not always, but it's one of the things I like to refer to. There's a book written a while back. It's kind of one of the classics, but it was written a long time ago, like I think in '89 or something. It's Market Wizards by Jack Schwager. He interviewed top successful traders to find out what they had in common. And what was interesting was that they had a couple things in common. Number one was they all got slaughtered before they learned discipline. Every one of them lost at least half of their initial account before they finally conquered what they wanted to learn. And number two, which is the ironic thing, Schwager tried to find out what the thing that they did in the market was so that he could just simply duplicate that without really learning how to trade. And what he found was the thing they had in common was that they had absolutely nothing in common. They all did their own thing. The only thing that was unique, they all did something unique. The only thing that was kind of in common was that they all waited for that one special thing to happen. In other words, they all got very specialized and focused. And that's an important thing I want to bring out, especially for anybody who's newer. There is no magic bullet. There is no holy grail when you're learning the market. There is no magical technical indicator. There is no super special chart program, there's nothing but just good old understanding of charts, and that's why I call it learning the language of charts. They speak a language. When you understand it, it gets odds greatly in your favor. It's never a guarantee. That's not what trading is about. It's getting probabilities in your favor, such that when you handle the winners right and handle the losers right, you end up making money at the end of the week. A couple of favorite trades for me. I do really just three things. And one of those three things, about a third of my trades come from gaps. Now we call these, if you've been around a while, we just call these gappers. For people who are new, we're talking about stocks that open the day at a different level from where they closed the prior day. It provides a unique opportunity. As I put here, it's one of the only two times you actually have an edge in trading. Gaps provide a lot of movement and can be played early in the day as a day trader, can be played over lunch as a day trader, or can be played as a swing trader. Probably the best account you'll ever have as a swing trader would be one that's properly done from managing and entering swing trades properly from gaps. So this was, and again, when I use examples, I just use examples from the last couple of days. Now I did these charts, these slides. I was busy last night. I had to go somewhere. So I did these Wednesday night. So these are trade examples from Tuesday and Wednesday. I just took one example of each of two of my three favorite things. This is a gapper. This was on Tuesday. It was SNAP, S-N-A-P. This is the daily chart, and this is the 5-minute chart. The daily chart gave a gap, and I have a rating system I use to rate gaps. It tries to keep me somewhat objective as I look at these. It's really very accurate when you look at the right gaps. You'll try and make something out of something that's not there. This gap got a high rating for me and was something that I felt was tradable early in the day. So when the stock opened, here's a 5-minute chart over here on the right side. You can see the gap in the 5-minute chart. I actually came in and very aggressively, there's the gap on the daily, and got in buying that bottoming tail right in there. And sold on a very strong rally that happened very quickly. You can see all that happened just, inside of an hour. It happens very, very quickly sometimes in some of these gap plays. I don't actually like to trade real fast. I'm not what you want to call a scalper. Even though a lot of my entries get very refined, I like to find trades that maybe move for a half day or a full day. This one just moved so much, I decided to get out. But then as I keep this on my screen, this is when I actually re-entered a second time. That doesn't always happen, but I re-entered just after lunch began and took a second target right in that area up there. So that was from Wednesday, one of my favorite types of trades called a gapping play. You have to be very specific about which ones you look at. Out of all the gappers every day, I only pull out a small handful to even consider for that day. So you have to be very specific at what you look at. The next day then, on Wednesday, this is just a good old-fashioned strategy from understanding the technical concepts on daily and hourly charts to find good setups that could be kept as swing trades or ones to use as a day trade. There's no better setup you can have going into the day as a day trade than one that's already moving on the daily or hourly chart. So this particular day, this is Wednesday, this is AMAT, and this is a stock, and this is the day that I was looking at right there, that bigger green bar day, the last one on the chart there. And it had started to turn the corner, and it broke trend on the hourly chart from a downtrend back to an uptrend. And I came in this day on the 5-minute chart, and I took what's really a very late entry for me this day. There's some reasons I did that. So this is not a huge play. I did take it all the way up to this high. So it was a good trade. And then I kept half this to the end of the day. It ended up giving back a few cents. But really good trade. Normally I try to get these a little bit earlier, but because it was what I call a transitional type hourly chart, I didn't want to be too aggressive with it because it was a little bit of a confusing day on Wednesday. I felt we were going to turn and go back to being bullish, but I wasn't 100% sure. So here's examples of the first step of trading is to get a system, a concept down. Not really a system, but rather a method of understanding exactly what to do and how to do these things. So you understand exactly. By the way, Renee, if you're listening, I don't have access to like post my email or website. Actually, I think I can post because I didn't expect to have my whole monitor covered up here. But actually, I think I copied and pasted my, nope, I can't send it out there. But maybe if you could do that sometime, that'd be great. So if people have questions, they could just get a hold of me. Here's the issue that I want to get into now, though. So you learn how to read charts. Great. Good for you. You take a stock and you short it, and it goes from here down to here. That's great. But the question is, did you make money on it? Did you put money in the bank? And what I find for a lot of people is that even after they've learned the charts, even after they've learned what they're doing, that they have a hard time taking the technical concepts and translating them to money. I don't know if you guys can talk or not, or if you do talk, but I always love to get feedback here. Is this something that's an issue for you? I don't think I can see you guys talk, but just think to yourself, is this something that's an issue for you? Is this something you've gone over and over again? And at the end of the month, you end up saying, well, okay, I'm pretty good at reading charts. I know when something goes from point A to point B. The problem is I'm just kind of break even this month. I'm break even again, I'm break even. I just can't seem to turn the corner and put money in the bank. Well, a lot of what you have to understand involves not just knowing if something goes from point A to point B. To put money in the bank, you have to understand full management concepts. It's a big part of what I teach. And management to me is not just managing to the target. It's managing the entry, managing the stop in some cases, and managing the target. These concepts are not commonly taught, and to me, they're the biggest, most important things. The typical ways to enter positions that are typically learned early, and even when I learned very early on, I never ever used anymore. I haven't used in years because there are superior ways to do it, and I consider that all part of the management of the trade. Let's go back to how you may even take a look at your trades. I showed you this slide earlier. Today's results. This is Sally's results. Plus $200 on the first day, plus 150, plus 50, plus 50, minus 500. Let's say, and I want to say Sally's a new trader, and let's say that her risk amount was $50. Okay. Again, I don't think you guys can type to me, but my question to you, if you can think about it, is if you had to talk to Sally and say, hey, Sally, I want to give you some advice. To be a better trader, what would you tell her to do? What would you tell her to do? Those are her results. Plus 200 for first trade, plus 150 for second play, plus 50, then minus 500. Obviously, there's a glaring problem here. And what a lot of people will say is, well, Sally, what you have to do is you have to take this $500 amount and you need to restrict your loss to being only, let's say, $50, $100. If your loss limit was $100, that means on this particular day, you would have made $350. Does that sound right, everybody? Think about it if you can't type. If the loss limit for Sally this day would have been $100, if she would have held to that, she would have made $350, correct? Actually, that's not correct. We don't have the information to make that decision. As a matter of fact, in this particular case, if Sally would have limited her loss, let's say to $200, that's what I did the slide to, sorry, she would have actually lost $1,000. Because how do we know that in order to get to $200, she didn't go negative 300 first and just hung on to it? How do we know for all these trades she didn't go beyond negative 200 initially? So in other words, it's not as simple as just simply saying, oh, we need to change that loss amount. We need to look at her entire trading concept, how much she needs to make a trade works, and really work with, and the true concept of back testing comes in here, is to back test your own trades and understand where you get in, where things run, and what the best parameters would be in terms of management in order to get the most money out of what you do. This is one of the first keys that people need to understand, even when they know how to read a chart, in order to get that money and put it in the bank. Okay? Some lessons from this: you cannot learn just by looking at your trading records. You can find violations you made, but you cannot find what is best for your trading until you see how the records match the charts of your trades and you examine and test alternatives. It's a big part of what I like to teach people. Ironically, the things traders want to look at the least is where the real value lies, in the losing days. You will always have losing trades. You will always have losing days. You will probably I still occasionally have losing weeks. But when you're new especially, the real gold is getting in and understanding why you had a losing day. And sometimes the answer may be, hey, it was just a losing day. I did nothing wrong. One of the problems as a new person, though, is how do you know if you did something wrong or not? If you're just learning your strategies, learning your techniques, it can be a difficult question for you to answer. I went through a little tough patch very recently, worse than I had in quite a while. And I came to realize, and that's where I came up with this presentation actually, is that I can look at my trades, and even after a bad patch, I can look and say, hey, that was a good trade. It just didn't work. And it got me to wonder, if I was brand new, how could I do that? How would I have the confidence to look at a trade and say, hey, you just lost twice on that same trade. How can you sit there and say it's a good trade? Well, I know it's a trade. But how do you know that if you're new? And the answer is you don't really. All you can tell is if you're following your rules and your plans. So somewhere along the way here, there has to be interjected some kind of coach or person who understands what you're supposed to be doing and understands if your strategies are ones that are going to be working or not. Make sense? Another funny thing about looking at these trades is, let's say when you're new, you may have a trading log that looks like this: a $50 risk because you're new. You make a great trade for $200. That is a great trade. 150, 50, 50. And then you blow it because you're new. You can't get out, you don't stop, and you take this terrible loss of $500, 10 times what you're supposed to. You end up with a small loss for the day, right? But what's funny is when you become a great trader and you decide to risk $500 a trade. Well, the first trade, you find that you took a partial profit, a half of a risk unit. And by the way, I like to use the term R unit a lot, risk unit. And in this case, it would mean that if you risk $500, if you made 250, you would have made a half of an R. I'm going to refer to that later. In this case, you made less than a half R, and then you made about a third of an R, and then you made just a little bit and a little bit. And here, the loss wasn't really the problem. That wasn't a violation of your plan. You lost the amount you intended, but yet, if you look, both of these trading results end up exactly the same, even though you're supposed to be a much different trader. And the reason is because you go from reckless and careless to being fearful, and you don't try to actually make money. You try to limit your losses as a more experienced trader, which is not actually what you're supposed to be doing. Focusing totally on limiting losses will guarantee that you will have a losing career, one of slow, bleeding paper cuts, but nevertheless even more painful, and a losing career. I hope that makes sense to everybody. You can't do that. You have to learn how to trade, get confidence, do the right things, and do them at the right time. As a matter of fact, there's a saying that somebody has out there by the name of William Eckhart that exactly states this. After I was teaching this for quite a number of years, I ran across somebody sent me what he said. And it's this: one common adage that is completely wrong-headed is, you can't go broke taking profits. That is precisely how traders go broke. While amateurs go broke taking large losses, professionals go broke by taking small profits. Couldn't be truer. I've worked with many people over many years, and this is what people often turn into. And the reason that happens is because they don't have a firm understanding of technical analysis. They don't really understand with confidence what trade should work, what trade shouldn't work. So they're always worried about limiting loss, limiting risk. Guess what? You have a loss limit whenever you start a trade. It's called your risk amount. You took share size with a certain stop amount that guarantees you're going to be limited in the loss. That is your safety net. You don't need to install 37 more nets every trade you take and continue to try and minimize your loss, because in doing so, you simply guarantee most of the time that you will end up with a small loss, but never nice gains. There's no blanket answer. This is the psychology that is only overcome through understanding charts, analysis of the trades from that understanding, and that all of this leading to confidence. Until you get that confidence, how do you begin? And here I'm talking to two people. I'm talking to anybody who's new, who's looking into either trading or investing for themselves as something to supplement income, to manage your long-term money, or to become a trader, really adding income to what you do, or becoming a full-time trader. A very important lesson, because almost everybody does this wrong. You need to establish confidence and an understanding of the charts in terms of some kind of a plan that you're going to carry out. And you will never have that confidence until you are able to do it first on paper and then very small risk amounts. Now, I'm not big on paper trading. There's a big downside to it. But I think absolutely positively everybody should start off paper trading until they learn their platform, until they learn their technical analysis, until they develop a working plan from that technical analysis that they can follow every day. Very simple comment. If you can't make money on paper, you will never make money with real risk on the line. And I suggest that you paper trade about 2 to 4 weeks, and that's it, no longer than that, because you can develop a false sense of security. Anybody can make money on paper. So you have to at some point switch. And here's where the key is. When you switch, I want you to really and literally risk $5 to $10 a trade. That's it. That's it. And I know that means that even if you win, you're going to lose because of commissions. That's okay. When you start off, it's a fee to learn how to trade. But it is much better that if you have a rough time starting, that you end up the first month losing $1,000. That's a lot better than losing half of your account, which is what a lot of people do. Because they start off saying, okay, I'm just going to risk $100. Well, guess what? That starts to add up. And it adds up not only in the account, but it adds up mentally. And pretty soon you're revenge trading, and pretty soon you raise your risk amount, even though you're losing on every trade because you need to get that money back, right? And this is where the real problems start. And this is where everybody runs into big problems. So you need to get that confidence level. You need to get it when you are paper trading, and then continue to maintain that as you're risking $5 or $10. When you accomplish your goal, and I don't care what your goal is. I don't care, you can make up whatever goal you want, but when you achieve it, you move up to $10, then to 20, then to 50. And you keep doing that. And if you ever do not achieve your goal that week or those days, you stop. And there should be a negative goal where if you lose a certain amount, you go back to the last step. You learn to trade properly, you develop skill and patience. Something that people don't understand until they do this a while is that you will never look at the chart the same way when you have money on the line as when you're just looking at a chart to look at it for fun. If you can take a trade on paper or risk very minimal amounts of money, you can look at the trade and you can look at the chart and you can really learn and understand what you're doing. When you start putting real risk amounts and it's starting to bother you that you're losing money, you get into managing the money and managing the trade and not ever looking at the chart anymore, and your learning completely stops. Your learning completely stops. Who is this for? This talk about paper trading trading with minimum risk. And by the way, doing this, you should be in your full risk amount if you're doing well in, 6, 10, 12 weeks. Depends on how fast you go. But it's not like a permanent halt. It's simply a test to make sure you're worthy of risking real money. Who is this for? My answer is, are you kidding me? Come on. If you have to ask, this is for anybody new and anybody who is not making money. Period. If you're not making money, and you haven't been, guess what? You're new in the eyes of an experienced trader, or you'd be making money. I talk to people that have been trading sometimes for a year and they're not making money. I ask them about their trading plan. They say they're working on it. I ask them about what they're risking and they say, oh, I'm only risking $200 because I want to be conservative until I learn how to trade. Here's the next big thing that I think people really mess up on. What you should do is learn how to trade and then continue to raise your risk amount through confidence until you are risking an amount where making one risk unit a day makes your living, if you're going to do this full time. I'll repeat that again in a minute. But here is the common mindset by somebody who thinks they're being smart and intelligent and conservative, and it actually is what causes the problem. They learn how to trade and they're doing okay, and they learn the charts and they say, well, I'm just going to risk $100. That's all I'm going to risk. And they do that when they start off sometimes, but the losses add up mentally and physically. But let's say that even down the road, they start to learn how to trade and they start making money, but they're not terribly confident yet. They're going to be cautious and keep the risk amount at $100 or $200. But let's say the trader needs $8K a month to make a living. What happens to this person? Well, the funny thing is, by trying to be conservative, you actually find that you're being extremely risky, because if you need to make that much a month, that means you need to make $8K a month is 20 tradings is $400 a day. So $400 needed a day means that if you're risking $100 a trade, you have to make 4 risk units a day. Guess what? That's really hard to do. That's really hard to do. Making 4 real, I don't mean on the chart, the pretend risk units that people talk about. Oh, I had a 10-cent stop, it went 40 cents. I'm talking about tying the money to it and making a real 4 times what you risk. So where I think that is a huge mistake is that once you learn how to trade and once you prove it through confidence, you work your way up from 50 to 100, 200, 400, that you work your way up to risking $400 so that you can trade and make 1 risk unit a day to make your living. Here's something for you to remember: an hour a day keeps the old job away. Do you know how easy it is to make 1 risk unit a day? Now I say that a little tongue in cheek. On any given day, anybody, including myself, could find it hard to make 1 risk unit a day. But on average, making a risk unit today should be relatively simple for anybody who's well trained in the charts. You assign an amount to that that makes your living, and this is how you become a successful trader. And virtually nobody does it this way. Everybody starts off too high, and then they never raise the risk to where they should be, and they try to take more and more and more trades. The problem is that when you're up $100 or $200, but you feel you have to make 400, is you start forcing more and more trades. If you let the money add up, I'm actually doing pretty good on time. I'm over at 2:30, so I assume that somebody can ask questions if they want to. I want to leave about 10 minutes at the end for questions, which I will do here. But just giving you a very simple sample here. If you were to take 5 trades a day as a day trader, and that's a pretty active day trader, I think. I like to do, 3 or 4. I sometimes hit 5. Let's just say that you got a batting average of 50%. Every other trade right. I don't think anybody would deny that's not hard. And let's say you're sharp. Now, a sharp means that you're a 1.5. It means that your average winner was 50% greater than your average loser. So you make $600, you lose $400, and every other trade's a winner loser. I think most people would agree. If I could talk with you, they'd say, "Hey, yeah." Every time I'm in front of a crowd and I ask, they go, "Yeah, it's easy to do." Okay. Well, if you're risking $200, your profit from winning trades is X, your profit from losing is Y, and you make $5,000. And let's just go crazy with expenses. Let's say your commissions are $35 a round trip. That's insane. Let's say you're $500 for a trading room or software or data feeds, whatever, your lunch, massage, whatever it is, you end up with $800 profit. Well, let's say you keep these same trading results, you go to a $300 risk. Well, the numbers carry down through. Boom, 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 boom. Now you're making $2,250 gross and $1,500 losing, and boom, $7,500 now. Now you're making $3,300. Now there's maybe something that adds to your income. You move the risk up to $400. Boom, 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 boom. Same numbers. $5,800. Maybe that's something you consider to be your living at that point. And again, the numbers haven't changed. It's just increasing the risk. And again, you can't increase the risk until you learn how to trade. It's kind of this catch-22 where people do it backwards, up to $500 and so on and so on and so on. And these risk amounts are not unrealistic at all. They're very, very simple. The only time it can get to be a problem is if you are what I would call more of a scalper. If you are trading very small targets with very small stops, those small stops will mean you need a lot more shares. And getting those additional shares may cut down on the number of stocks that you actually have to trade from because you need more volume and liquidity in those stocks. But that only becomes an issue when you start getting up like over $600 and you're kind of a scalping type person. Otherwise, generally the door is open to probably trading several hundred different types of stocks every day, or several hundred different stocks every day, not different types. Review. First of all, you have to learn what I call the language of charts. And if you want to learn that from wherever you feel comfortable, the best thing is if you have a friend or somebody that is a trader that you know makes money, do whatever you can to be able to sit next to that person day after day, take out their garbage, cook their food, be their chauffeur, pay them money, whatever it is, because that's the most valuable thing you have. If you don't have that, the next best thing is to find someone that can teach it to you in a couple different ways. This is what I do. I have a trading room where you can just follow along. A lot of people in there just follow. They haven't even taken my classes. You don't have to be in the class to follow along in the room. They just kind of are taking the fish for right now. They want to learn how to do this, but while they're learning, they're making money by just following the room. Number 2, a lot of people want to learn how to do this. So I teach. I have 3 classes I teach. That is the sum total of everything I think you need to know to trade. I've learned 5 times that amount, 10 times that amount. A lot of big companies try to teach you tons of stuff you don't really need to know. It's called filler. It's what makes a 1-day class a 2-day class. It's what makes 3 classes 7 classes. To learn education for me, there's 3 classes that you would pay for, and that would be all you would ever pay for. I then help you through email. I'll jump in a chat room with you if you're having troubles. I had somebody that didn't even take my classes yet, and he emailed me with some problems. I said, hey, you know what? Let's jump in a chat room. Got in there with him for 10, 15 minutes, went over stuff. I have a real desire to want to help people learn how to do this because a lot of people think they can't because they got a bad education. They learned it the wrong way. They don't understand what they're doing. It gives technical analysis a bad rap sometimes because people don't really learn how to do this properly. What I see people teach sometimes, or what people say they were taught, or what they've learned, is so far off from the right way to do it. It's amazing to me. And another thing is that I feel that you need to understand at least like 90% of what I teach in order to make money. And we know for a fact when people walk away from a seminar, they only retain about 15%, even if they're smart, even if I'm a great presenter. So something that's very important is that you repeat the classes with me once you sign up. And by the way, they're very economical classes. They're very cheap. I'm trying to let people in and help to learn this stuff. And once you do, you get repeats of the classes forever. Also, every 6 weeks, I teach classes every 6 weeks. Right now, it may go to 8 weeks at some point, but every 6 weeks. And there's also what's called a practical application and review day. We're having ours actually next Friday, where all the students, the seminar students, will come in, and I show them how trades that I do in the room in front of everybody, how they apply the seminar tactics that I use every single day. The stuff I teach in the summer is what I use every single day, everything in there. So it's not like you're learning a lot of stuff that you never use. All this stuff is what you need to learn how to trade. You have to start off paper trading once you learn the tactics, and that's what I was talking about, learning the tactics first. Risk a micro amount. Get confidence to understand what you're doing. Move up when you prove you can do it. Move up the risk amount when you prove you can do it. Move down if you blow it. And keep moving up until you hit the risk amount, or 1 hour a day, one risk unit a day makes your living. I can't share more valuable information with you than just that. I am perfectly willing. Some people, I had a guy that signed up for my seminars a couple weeks ago, and he called me and he said, "Hey, I already signed up. I just kind of want to know who you are." And it never struck me. Somebody may want to know that. I'm just your average guy. Before I started the market 17, 18 years ago, I knew nothing about the market. I'm not a former market maker. I'm not a broker. As a matter of fact, market makers and brokers have a very tough time doing this. They're clueless, to be honest with you, and anybody who's been a broker that I've ever talked to would admit to that. I actually just decided to start doing this and learn from scratch. I am simply, my wife and I raised 4 boys, and where I happen to be now is we're just becoming empty nesters. And I find that it's this unique time in my life where I actually have a lot of time. Well, not a lot. I keep very busy. I do all kinds of things, but I have more time than I've had the last 10 years of my life. And I've kind of redevoted myself to teaching people what I know. So I have fun. I run a chat room every day that stays. I get off the mic at noon. I think it's a waste of time to sit there in the afternoon, blah, 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 blah. We leave it open. If there's something come up, I just type it in the room. But for the most part, we're doing our heavy analysis and things during the early part of the day. And that's the way I think it should be. That's the way I think everybody should be doing it. That's where most opportunities exist. There's days, if there's something that's going to be happening in the afternoon, we hang around and do it. So we're kind of working half days and learning what we're doing in the room. I don't know if anybody has any questions, or if you can ask them. Forgive me, I'm not quite familiar with the procedure. I'm looking at a screen where I think I would see questions if I have them, or Renee can let me know if I'm missing any. If you want to email me personally, my website is disciplinetradingstrategies.com. If you get close enough, Google will take you there these days because enough people have visited it. Once you're there, you'll find how you can take a trial if you want to, how you can email me. I'm just simply Paul at Discipline Trading Strategies. I don't mind hearing from you, just to answer questions, even if you never intend on doing anything with me, that's fine. Some of you may know me from the past. Feel free to say hello. And when you're there, read over the site. You'd be surprised at some of the things I have to say on there, I think. It is 2:25. My timing is perfect. It's exactly where I thought I would be. So I don't know if anybody has any questions or not. If not, we can consider myself done with 5 minutes to spare.
It does look like you have a couple questions. If you go to the dashboard and click on questions, it'll show them there for you.
All right, sorry, Renee. I don't know why I've used this platform before, but for some reason I see audience questions that were from the last presenter. It's a dashboard. Oh, here we go. Here we go. Separate thing called questions. I think I got it. All right, sorry. You guys were replying. Oh, I'm sorry. You guys were replying to me. My bad. I thought I had the right window open. I didn't. I don't use this platform all the time. So, okay. All right, let me start at the bottom and work upwards. Your points apply to early present. Oh, yes, yeah, I said at the beginning, Glenn, this is similar to one I did recently because it's a new audience here today. Okay. Hey, DW, thanks. How much? I assume you mean the classes. Go to the website, but they are $12.50 a piece, $3,000 for all three. Everybody's taken all three so far. If you've taken classes from me, of which are very similar recently, you can get part of the retake program for a very economical fee. Lars, I don't recommend. I'm not recommending currently any prop brokers. You can email me if you want to ask something else, but I'm not currently recommending prop brokers because I want to, make sure I have vetted them or whatever. I haven't done that yet, but feel free to email me if you have any more questions. Okay.